Today's topic is year-end to year-ready, what nonprofits need to know for Form 990. My name is Morgan Lee, and I work on the business development team here at Tax 990. If you've contacted us recently, there's a pretty good chance we've already spoken. And before we begin, just a quick note, we do aim high to provide helpful insights and suggestions. We are not tax advisors and cannot offer tax advice. This webinar is for educational purposes only and focuses on IRS e-file requirements and nonprofit best practices. Also, if you have questions along the way, please feel free to add them to the chat so we can address them at the end during the Q&A. All right, as the year wraps up, now is the perfect time to set up your nonprofit for a smoother Form 990 filing. This webinar walks through key year-end considerations, common trouble spots, and practical steps nonprofits can take now to avoid delays, errors, and stress later. On today's agenda, we're going to cover several things. You'll learn how to identify key information to gather before the filing season begins. We're going to go over how to avoid common year-end mistakes that slow down Form 990 preparation, discuss how to prepare your organization for a timely, confident filing, and then, of course, have the Q&A at the end of this session. First things first, you'll need to know which form you're required to file. For most organizations, it's going to depend on your gross receipts and total assets. Filing the wrong form, whether it's a 990, 990 EZ, or 990N, is one of the most common mistakes that we see. So before you file, make sure that you confirm your total revenue for the year and your total assets at year end. Once you have those numbers, you can confidently select the correct form. The next thing that you should gather is your filing deadline. This can be found on your determination letter. Most organizations must file by the 15th day of the 5th month after the end of their fiscal year. For calendar year organizations, it's typically going to be May 15th. It's critical to know your organization's fiscal year end date, whether you plan to file on time or request an extension. Missing the deadline can result in penalties or even jeopardize your tax exempt status. So this is not a step to overlook or delay. The next slide is going to outline the different types of forms available. You can reference your determination letter, which will provide the specific form type applicable to the organization. Form 990N, also known as the postcard, is for small nonprofits with gross receipts normally less than or equal to $50,000. Although only minimal information is needed, the IRS requires that you confirm it. The 990EZ is also known as the short form. This is for organizations with gross receipts under $200,000 and total assets under $500,000 at year end. If an organization exceeds either threshold, they must file the long form 990. The long form 990 is required if gross receipts are greater than or equal to $200,000 or total assets are greater than or equal to $500,000. Form 990-PF is specifically for private foundations, and it doesn't matter the financial size. And let us not forget 990-T. This form must be filed alongside the 990 series forms for an organization that earned a gross income of $1,000 or more from unrelated business income. And remember, even if you have zero revenue, you still must file a 990 series return. Just to break down the gross assets and total, the gross receipts and total assets a bit more, the gross receipts are not just profit, but it's the total amount that the organization received from all sources during its annual accounting period before you subtract any cost or expenses. Total assets can include cash, accounts receivable, land, buildings, and equipment owned by the organization at the end of the tax year. We'll talk a little bit now about finances. You're going to need a clear picture of your revenue and expenses for the year. This would include program service revenue, contributions and grants, fundraising income, and administrative and operational expenses. Governance details are another critical area. Before you file, make sure that you have a list of your current board members and officers, including titles and roles, And then where required, add the confirmation of independence. You'll also be asked about governance-related questions, whether its policies are in place and whether the board reviewed the return. Having the information ready will ensure accuracy and transparency. Next is the program service revenue. On IRS Form 990, this is the income a nonprofit earned from carrying out its mission-related activities. Some examples could include a nonprofit school collecting tuition, a nonprofit hospital that bills patients, a museum selling admission tickets, or a charity charging race entry fees for like a fundraising run. Contributions and grants. These refer to voluntary financial support provided to your organization and may include individual income or donations. It could include foundation and corporate grants, government grants, or non-cash contributions. Fundraising income on Form 990 is money that a nonprofit raises through fundraising events or activities where donors receive something of value in return. This could include things like a ticket, dinner, or merchandise, specifically gala ticket sales, charity golf tournaments, auctions, or raffles. Have you ever hosted one of those events? If you have, your organization would report the income from it on 990 as fundraising income. All right. Administrative and operational expenses. These are the costs of running an organization that are not directly tied to specific program or fundraising activities. Some examples could be fees related to the finance and accounting staff. It could be the HR department, audits, office rent, utilities, insurance, or annual reporting. This information should be already reconciled and match the internal financial statements. Numbers on the return should align with what your board has reviewed and already approved. Okay. Another important piece is the program service accomplishments. This is one of the most important sections of the annual report or filing because it answers a simple but powerful question. And that is, what did your organization actually do this year to advance its mission? Here you can move past budgets and governance to showcase the real impact of your work. A strong program service accomplishment section shows funders, regulators, donors, and the public that resources were effectively used and purposefully used. Be prepared to describe your major programs, who you served, and the impact of your work. You can include your major programs to outline primary initiatives and activities. You can focus on the programs that represent the bulk of your time, your funding, and its mission. For each program, make sure that you include the purpose, the specific services or activities provided, and of course, how the program supports your mission. Another tip is to avoid language like provided support or raised awareness. Instead, be specific with who you served. Be clear when identifying your target population and actual beneficiaries. Consider including the number of individuals or families served and the communities impacted. This will help the scope of your work to be understood. It'll also demonstrate alignment between your mission and service population. The impact of your work is where you move from activities to outcomes. Go beyond listing what you did and explain what changed. A couple of strong impact statements might highlight things like how many participants achieved measurable results, graduation or completion rates, and then greater access to needed services. Now that we've talked about the information that you need before filing, let's shift gears and talk about something that is just important, which is common mistakes. These are issues that we see over and over again, and the good news is that most of them are completely avoidable with a little awareness and preparation. One of the most frequent mistakes is missing information, especially the schedules. Many filers will complete the main form but overlook required attachments such as schedules related to fundraising, governance, and specific activities. Before submitting, always double check which schedules apply to your organization. Form 990 includes several schedules that gives the IRS a little bit more detail about specific areas of your organization, and you only need to file the ones that apply to you. Some schedules will focus on public support and major donors. Others cover advocacy and governance. Some schedules provide additional financial detail, such as reporting non-cash donations, tax-exempt bonds, or major organizational changes. Several schedules relate directly to your program and activities, including things like foreign operation, fundraising events, grants, or disaster relief work. And finally, there's a schedule that allows you to tell your story in plain language, where you can describe the impact of your organization and how it's coming along. Overall, these schedules provide depth, detail, and compliance. Another issue is failing to report unrelated business income, or UBI. Unrelated business income is income a tax-exempt organization earns from a trade or business activity that is not substantially related to its exempt purpose. Some examples of UBI would include advertising income, operating a retail store unrelated to its mission, selling merchandise not tied to its programs. Oh, and then in some cases, it could be parking lot income. Some organizations assume that because they're tax exempt, all income is exempt, but that's not always the case. If your organization earned income from activities not substantially related to your mission, that income may need to be reported. And when you identify the UBI early, it helps you to report it accurately and then determine whether you need additional forms like a 990T where required. The public support test failures can also be very serious. This test will determine whether your organization continues to qualify as a public charity rather than being reclassified as a private foundation. Problems can arise when revenue sources shift or too much support comes from a limited number of donors. Be sure to monitor your public support throughout the year. This can help protect your classification. One of the most severe consequences of filing mistakes or not filing at all is the loss of exempt status. Organizations that fail to require returns for 3 consecutive years can have their exemption automatically revoked. Reinstating the exempt status can be time-consuming, costly, and definitely disruptive. Something else that can cause a big problem is an inaccurate EIN. Using the wrong EIN, whether it's a typo or an outdated number, can result in delays in processing and rejected filings. Make sure that you verify the EIN against the determination letter before you submit your return. Also, filing with the incorrect tax period is another common mistake. This happens when an organization changes its fiscal year or a filer assumes a calendar year before confirming. So make sure that you verify before you start filing your return. Another key area to watch is ensuring your initial return is filed accurately. The new formed organizations sometimes file too early or too late. They sometimes select the wrong form or misunderstand their first year reporting requirements. Just a quick story here. One of our clients, a small nonprofit, filed their first Form 990 a few weeks too early, and then they accidentally used the wrong version. The IRS sent them a notice, and it created a lot of stress for all of their team. By working with us to correct it and understand those first year IRS rules, they not only avoided penalties, but they also set up a strong compliance routine that made all the future filings much smoother. Yeah. Make sure to take extra care with the initial return. It helps establish a strong compliance record from the beginning. This keeps the organization in good standing, again, just from day one. An incorrect classification can also impact almost every part of the filing. This includes being misclassified as a public charity instead of a private foundation or vice versa. Classification affects reporting requirements and public support tests. Confirming your classification will ensure that you're filing correctly and meeting the right standards. So one of the best things that you can do to start early is to start early. Prepare for your timely and confident filing. Even when the filing deadline feels far away, just create a simple timeline that helps prevent last-minute stress. So you'll want to start early. Next, you'll want to focus on the organization by gathering and storing key documents all in one place. You can hold on to the financial records, governance and policies, program and activities, and then, of course, the prior year returns. Before you complete a new return, take time to review those prior year filings. These can help provide context for consistent reporting, understanding required schedules, and then, of course, identify changes year over year. And then before you submit your return, of course, make sure that you check the EIN and organization name, tax period and filing year, the revenue, expenses, and totals, and then all required schedules and attachments. This review can prevent corrections and amendments. You will want to plan some time for review and approval. Don't let the filing end with just the preparer. Make sure to involve management, finance, or the board in reviewing and approving the return. Finally, just know that you have options. If you're not ready for the deadline, filing an extension is far better than missing it altogether. An extension gives you an additional time to file accurately while remaining compliant. And just make sure that you make that decision early, not last minute. All right, that brings us to the end of the main portion of today's presentation. We've covered how to prepare, what to watch out for, and how to file with confidence. When you're ready to get started, visit tax990.com. You can create your account, and then if you have any questions about adding an organization or getting set up, don't hesitate to reach out to us. We're here to support you every step of the way. Our dedicated support team is available to help answer your questions, guide you through the process, and make sure that you feel confident getting started. And then I have our number listed here, 704-839-2321. You can reach us by email, support@tax990.com. And we also have a chat available on our website. We have tons of tools and resources and support available for you, just so that way you're confident navigating 990 and nonprofit compliance. Our website includes a knowledge base where you can find quick answers to common questions and then stay up to date on the new requirements. We do also have a YouTube channel with step-by-step how-to videos and other helpful guidance. That brings us to our Q&A session. We'd love to hear from you. Go ahead and add some questions to the chat here, and then I'll give you a few minutes and we'll go over a couple of them. Okay, we have a couple in here. The first question is from Michelle. She is asking us if we discovered a bookkeeping error from a previous year during our year-end close, should we amend the prior 990 or count it in the future filing? So if the form has been accepted by the IRS, you'll need to file an amendment. You can actually do that with Tax 990 and it'll be covered under the Tax 990 commitment. That, just so everyone knows, that does cover you when you're filing with Tax 990. It's called the Tax 990 commitment, and you get free amendments, which is really awesome. See the next question. Do we need to file if we had no income this year? So Ben, you do need to file. Even if the organization had zero revenue, you're still required to file a 990 series return. And like we discussed, if you fail to file, it can put your tax exempt status at risk. So go ahead and file with no income. This question is from Haley, and it says, I misplaced my determination letter. Where can I find it? That's a good question. We get that one frequently. If you filed with Tax 990, you can actually find your determination letter and the IRS summary of your account. Otherwise, you can visit irs.gov or reach out to them directly, and they'll be able to provide you a copy with it. Rita has a question, and she is asking, what happens if we miss our filing deadline? So if you miss your filing deadline, I still recommend filing as soon as possible, just to avoid penalties. Keeping in mind that if you fail to file for 3 years, the tax exempt status can be automatically revoked. James is asking us, if we file an extension but miss the deadline, can we apply for reasonable cause to have the penalty waived? So yes, James, if you file the 8868, the extension form, you can do that, but just be advised that this does not guarantee that the penalties will be waived. I would just recommend filing accurately. Time and returns is very important to the structure and success of the nonprofit organization. And then Kimberly is asking if she can file an amendment with Tax 990 for the 990N. So there's no amendment at all for the 990N, so you wouldn't be able to do that because you wouldn't need to do that. All right, so if I didn't get to your question today, I am going to follow up with you. And again, you can reach out to us with any other questions that you may have. And thank you for joining us today. We appreciate your time and look forward to supporting you with your filing needs. Hope everyone has a good day.